All right. Hello, everybody. Welcome back to another episode of Palantir Weekly. This is episode number 70. And this is an important one because we've got Q1 2023 earnings on Monday. Going to be super, super excited for it. I will be live streaming that as well, I think at 4:30. So if anyone here wants to join, open invitation for you guys to come on the channel there. Matt Money, what's up, baby?
You're all I ever wanted.
Are you talking about Palantir? Or me?
All I ever needed. Hey.
Okay, so here's the question. Did you have any hints
to do now?
Do you have any hints of tequila before this pod?
But I want Amit back. No, I'm actually sober. I've had some Dr. Pepper.
Why are you sober, man? We're talking about Palantir earnings. We need
a drink in order to absorb.
It could be that bad of it.
I don't know, man. My heart says it's gonna be okay. My head says this sucker's getting sold off, and we're heading below 6. But
below 6, wow,
man,
that's dramatic. What's the variable on that? What's the percentage drop from where we're at to 6?
Well, we're at 730.
It'd be like 7. We're at 748.
15-20% drop.
Yeah, 15-20%. I don't know. Look, all right. So let's get into it. Right, Palantir earnings
historically is a 13% drop for the last 5 quarters. They're saying either way it'll be a 10% up or down, based no matter that's what analysts are saying.
Right.
But we know you can't take the analysts for gospel.
So let's get into that. I think the biggest thing we should talk about is GAAP profitability, and then we'll let the conversation go into a bunch of different areas. But obviously, they were GAAP profitable last quarter. S&P 500, they made a big deal out of that. The question is, do you think we have the metrics, the deals, the cash flow to be able to maintain GAAP profitability? Do we do enough corporate fiscal responsibility in terms of reducing enough costs to be able to financially engineer this? And if we aren't GAAP profitable, what do you think the implications of that are? Dom, we'll start with you since we haven't seen you for a couple months, and then we'll move on.
Yeah, glad to be back, guys. First one, just give a shout out to the 3 gentlemen on the pod here, man. I've just been watching all your guys' videos, and got my new little Apple pen, and with my iPad, I was taking tons of notes on all the videos you guys have put out. I don't know how you guys do it between just normal life work and then doing this. So mad props to you guys. So I definitely think that we haven't seen a lot of announcements from them, right? You haven't seen a lot of deals and a lot of visibility, the flash like we normally have, kind of trying to do back of the math napkin stuff with, where you can project where they're going to fall on earnings. And it really comes down to what they do with their SBC, right? To see if they want to keep GAAP profitable. Loved your video, Amit, about, the idea of, hey, we made some, news and notification that with this new change, we got the founder-led shares. If we have 4 quarters in a row GAAP profitable, maybe we enter the S&P 500. One of my other favorite holdings, Axon Enterprise, just entered, S&P 500. So I thought that was a really interesting take that you had on that. A lot of people, tons of people making Palantir videos on the YouTube communities, and a lot of people think that, hey, this is going to be the quarter we miss. We're going to, be GAAP profitable for the year, because that's what Karp kept saying over and over and over. It wasn't like he talked about consistency as far as GAAP, but more of just for an average. And to your point earlier, Amit, before we jumped on, I think if we don't hit GAAP profitable, I think there will be a sell-off. If you look at what happened in the market today, it was super green except Palantir till the end. So I bought more shares today just because, long term, I need to get my cost basis down. And overall, I mean, gosh, did you guys watch that AIP demo? Well, I know Amit did because he put a video on it.
We'll get into that. We'll get into that.
Blown away. So yeah, I honestly, I think it's unpredictable. I don't like to buy before earnings or after, but I just wanted to get my cost basis down, so I bought some shares this week.
Okay, Arnie, your thoughts on GAAP profitability and if we make it this quarter?
I would say, is this important? I would say from a perspective from the very short-term stock price movement, could be the reality as an investor is that it doesn't really matter. And why? Because Palantir already showed that basically if they want to be GAAP profitable, they can do it. Now, the other question is, do they really want to exploit the full potential of contracting margins, for expanding margins by reducing cost right now? I'm not really sure about that. Now, this means that the management is in control of the narrative. And let me point this precision out. We are talking about as entering the S&P 500 with 4-quarter positive quarter in terms of EPS. But the crucial word is not consecutive, but in the S&P rules, it is written cumulative. Cumulative means that potentially you can have like minus a little amount, minus a little amount, minus a little amount, and then boom, a big amount. Maybe only the 4th quarter to be very positive, and that's enough to actually enter the S&P 500. So I would not focus too much. I will not have a drama on in the case they miss for this reason. And I don't know if I can show the screen.
Yep.
Here you can see by excluding the stock-based compensation, we know that Palantir is already very positive in terms of EBIT margin. But the line we see below is the EBIT margin once you also consider in the SBC as a true cost. And this probably is the most important chart that we were needed to track. Once you are at minus 3% EBIT adjusted margin, and you have a cost structure like Palantir where the revenues are recurring, and you can basically choose how much you can spend on marketing, on R&D. It's there. Does the management really want to do that? I think it could do it just to make Wall Street happy. So my guess is we will see a number very close to 0 just to make Wall Street happy. If it's negative, but let's say the EBIT margin is -1, is that a problem?
So
I agree with that, Arnie. I was just going to say one other thing to that. If you saw Tom's video, when you look at like the last 2 years, the amount of revenue growth and margin growth versus the OpEx and the expenditures, very different. So I mean, this graph here that you have on your screen on the weekly article, it clearly shows exactly that, right? The fiscal responsibility and the efficiencies of the business model itself, which we were talking about 3 years ago, of acquire, scale, and then expansion. It clearly is showing that we're starting to see that more and more, and now we're starting to see more platforms added onto that.
Well, that's the beauty of a SaaS model that actually scales. If you can keep the cost under control, and the cost that Palantir is really good at is keeping the research and development flat, meanwhile literally printing new products that we don't only know that they work, but they are also on top of the curve. So while I see companies like Snowflake, Datadog keep needing to invest more and more in R&D just to develop new products, actually Palantir developed the platform that allows them to build a new product, and we see them doing it effectively. I was looking at a briefly review of the Palantir Bullets articles, because as you commented, hey, in these last weeks, we didn't have so many partnerships, announcements like we were used to. But the reality is that all of the announcements of a partnership were converging in December, early January, and we had actually so many, both
we
from the
did.
government side
did.
and the commercial side, on top of new products like AAP. Basically, is two products because it's one for defense, one for commercial. We had the Foundry Marketplace. So the reality is that Palantir is printing so many products that is even harder to actually track what we do.
Matt, your thoughts on GAAP profitability? Do you agree that, if it happens, it's great, but if it doesn't happen, it's not the end of the world, essentially?
Yeah, I mean, I'm not a quarter to quarter kind of guy. You know me, like I've been investing in this since 2020 timeframe. My timeframe always been 2030. The timeline for GAAP profitability, which is a fake metric anyway, has been accelerated from 2025 to 2023. And why I call it a fake metric is because, to me, GAAP profitability. Actually, let me take a hold of this for a second. How do you spell GAAP, Amit?
No. So what happened here, bro? Okay, so we edited the video, and he said GAAP, right? I personally went into the edit. I said, "Oh, it's capital GAAP." Then we realized we messed up another word, so we exported the old version, fixing that word. The word was commercial. There were too many M's, and we left the old GAAP.
I'm just kidding, shit, man. I know how that goes.
It sucked, but it's like, all right.
I know how that goes. I was just messing with you. But to me, GAAP profitability, when you think about it, it includes like non-cash items like stock-based compensation, which we've already been talking about, and write down of goodwill and things of the like. To me, I more so care about actual cash coming in and out of the organization. And so to me, I don't necessarily care about net income and stuff of the like when it comes on a GAAP basis, because you're including things like stock-based compensation that you can kind of make out of thin air, right? And it's kind of fake money. So to me, like, I more so care about that $2.6 billion over the course of the next couple of quarters that they have on cash going to 2.7, 2.8, 2.9, and really seeing that cash position continuing to build, and that adjusted cash flow from operations and free cash, which they made over $200 million of in 2022, continuing down that path. I care about them getting above $510 million in revenue. I care about them continue to get more and more customers through the door. I care about them getting continued net dollar retention above 110 to 115. I'd love to get it back to 120%. Those are the things I want to continue to see, the things that are positively going to draw this thing into the next direction. And I want to continue to see these foundational pieces. I don't really care about GAAP profitability. What I care about, these foundational pieces of moving into industries, moving into big cornerstone pieces like the NHS, or getting into Poland from a NATO perspective in terms of Department of Defense, getting into these big pieces where you're like, hey, this is another brick in the wall. I'd love to see with respect to some of the amount of money that we just sent in terms of arms to Taiwan. I'd love to see Palantir getting involved in Taiwan. These are things that I truly care about, because it's not necessarily about quarter to quarter. When you think about this, and Bezos talks about this beautifully, he's like, when you're looking at the internal metrics of the organization going up and to the right, which is positive, right? When you look up, right, positive. Who really cares about what's going on quarter to quarter? Because those things and those decisions have been made, quarters or years in the past. When you think about what Palantir truly does, they get into an organization, just like Dom had kind of mentioned, they get into the acquire phase where they're intentionally losing money, giving away the software for free. And then you get into the place where you're actually starting to scale and actually start to create revenue. It takes years for these things to actually become profitable. So to me, getting as many people in the door today just means that in 5-10 years time down the road, we're going to actually start to see the true foundations of really the labor that's been kind of going in. And the last piece I'll kind of highlight, and I actually want to make a video about this, is I saw somebody post something like, imagine having 4,000 engineers working for your company and not necessarily focusing on sales. And it's like, the funny thing is, you think Palantir only has 4,000 employees. Yes, you have 4,000 employees that actually wear the title of Palantir as their hat. But those are the people that just create the operating system, right? But then you actually have the partnerships of working with each one of these people, each one of these companies that are making applications that then you can embed into your own marketplace and sell to other organizations. It's absolutely genius. And I don't think people recognize that. They think that all the software and applications have to be made out of Palantir. Palantir is kind of just creating the ecosystem. It's creating like the App Store almost for the ability to kind of create all these customizable pieces of software. And I still think that people are trying to understand that like Palantir is not a software, like it's an operating system. Yes, when you look at it from a perspective of can it be classified as software? Yes, but it's the foundational piece of which your company operates on. It's not like a little piece of application you open for 30 minutes and go off of. And that's the big thing is like, so when you say there's 4,000 engineers working on the software Palantir, it's like those are the people that are working on the infrastructure, the operating system. But then you have literally hundreds, if not thousands of additional employees at every single organization that are creating customizable pieces of software. And that is the true benefit of Palantir. You don't see Microsoft really having that. You don't see Google or anybody else really having that sort of ability where they're interacting directly, building with their clients to create the software systems that are truly bringing themselves to the forward front. And that is truly what makes Palantir beautiful. So anyway, I don't give a crap. So to put it in perspective very quickly, I don't give a crap about GAAP profitability.
To do a quick pushback, it seems like Palantir gives a lot of caps. I don't know how to spell craps about GAAP profitability because they financially engineered it with this whole step acquisition stuff, right? Like, Matt, I agree with everything you said, but it seems like the company does not philosophically align with you. They are trying to appease Wall Street.
That's
right?
because they've been trying to do and explain things the way that I've been explaining things, and nobody seems to care. So now they're trying to appease the Wall Street.
Well, because they have shareholders, right?
Well, I mean, look at the economic times we're in too, right? Like, we are not in, and Arnie can definitely comment on this from an analyst perspective. We are not in the times of being sub 20% revenue growth and not putting out profits in a time of, let's call it what it is. We're already in a recession. No one wants to call it.
Real quick, Dom, I think that's the good point. If we were projecting 30% growth this year, then we don't mean GAAP profitability. Maybe the street's okay. Yeah, I think you're correct, Dom. If we're projecting 17% and we're not profitable,
then all of a sudden it looks uninvestable.
Yeah.
Well, and we always have to remember this is something that Karp said recently, but also reiterated many years ago. It was an interview around 2010 when he was asked about profitability, and he said, "Well, if we could be profitable already next year, but we will do what it will be better for the company." And he reiterated, our most important investors are the employees. So I speculate that the management right now is in control of the narrative, as we said before. And now I would say more than before, they have the tools to do that. On the one side, with the GAAP profitability, if they actually show that they can be GAAP profitable, but being GAAP profitable doesn't mean now printing 30%, 10% net profit margin. They just need to show that all those fears related to the SBC that will never be under control are not done. They can, and just by showing like ServiceNow keeps growing that 20-30%, while having like a 4% net profit margin out of 30% EBIT adjusted. So also there, the stock-based compensation impacts heavily. But the fact that at least they show some GAAP profitability makes Wall Street happy, because that is a sign that the company can structurally make a lot of money if they just want to reduce the cost. That's a sign of strength. Moreover, right now we are talking about the biggest explosion of the underlying trend that we have ever seen with Palantir of AI. If you make the comparison right now between Bitcoin searches, AI searches, we are very close now to the kind of interest that Bitcoin had in 2020, 2021. This means that the underlying interest of the trend is very, very big. And we know that despite Palantir is not recognized fully as an AI company in the wide sense of the word, we know from inside that Palantir is actually a leader in that. So right now, they are in the position that if they market themselves well, they can surf this way. And this could actually help both the stock price, but also the business, because for many people, even if in the SaaS world, Palantir is still a consultancy company.
I would also say, if you go up to someone in the street and ask them, do you know what Palantir is? You're going to get a lot of blank stares across the board, right?
Yep.
But if you ask them, do you know Microsoft? Do you know Google? Maybe even Salesforce. So we are still in such early innings. And even though it can be painful if you look at your cost basis like I did today, we understand the technology because we've done the homework, and some of us even work in the field or have worked with the tool personally. So, you know, I was watching your guys' videos, and I watched several CARP interviews this evening, and it really just dawned on me as like, you know, we gave him a lot of crap when he said, we're making stuff today that people won't realize they need 5 years from now.
Yeah. Yep.
And clearly, as soon as generative AI took off and people started realizing this is not a fantasy, and, you know, it's only a matter of time before, you know, we really get this thing going. They knew this already ahead, and they were using AI long ago. They were smart, though, as Amit said in his video. Hey, if everyone else is going to put the buzzword AI on there, we're going to blast it all over our website. And
speaking of that, let's get into AIP. Dom, you wrote a great article about this. What were your thoughts on AIP and any expectations on the new platform in combination with earnings?
Yeah, I mean, I look at, and I wrote a whole bunch of notes here on all the demos I watched. I look at AIP as definitely the accelerator to Foundry in their business, because they clearly, I love here, I wrote on the end, their last words on their video were real world action in minutes using large language LLMs in AIP without, and then they underline it, a single line of code. That is, and Code Strap's on here, so I know, you know, he can second this in the chat. No code or low code, really now it's no code with generative AI, is the future of programming. I have friends at work, you know, they're like, dude, a lot of developers are going to be out of a job. I get through my stuff so quick now with ChatGPT. It's like,
look, if AIP works and you don't need code, CodeStrap will just be Strap at that point.
Code daddy.
Yeah.
We're just gonna be Strap.
You know, so you look at that piece of it, and then you look at the demo that they did. I mean, they need to blast that demo. So what was interesting, right? So the wartime demo got 110,000 hits, like all over YouTube. Everybody's like, yo, this is dope. Yes, you know, definitely very important. But the scale and impact in the use case they showed on their website for the tornado impacting the Louisiana distribution centers, the cost analysis you could immediately run to see, okay, if we shut down this office, what are the overlying impacts? Do we need to actually charter additional trucks? If we do, what's the best option, and what is the cost savings, or what is the pain that we're going to have to face there? And then doing it securely so you could only see what you have access to, and having the right context on your business. And Karp said this in his interview. He said, if you don't have the right context, large language LLMs mean nothing, right? Like, we're going to get to a point where everyone's going to want to protect their data. You're going to have to pay me, Amit, if you want my data, and in order to get accuracy. So when you look at data being the new oil, which everyone has always said, and data being power, there's governance with energy, right? There's regulations and ethics and leadership positions. So Palantir's already thought through a lot of this. And if I have to pick over who I think is going to be more ethical and regulations and a leader, I'm taking Palantir over Google or someone else like that.
And I think the key word you said there is ethical, right? I mean, I did a video on this week, but that whole idea of the head guide AI Nobel Prize.
I watched it. It was great.
Yeah, when he left, I mean, all I thought was like, wow, so this is a big deal. Like when Karp says like we need to care about the data, I feel like for the past year we all were kind of like, all right, yeah, that's just philosophy. It's like no. That's like with the world generative AI, you don't get the NHS contract unless you can prove and demonstrate at the highest of levels it's not going to be malfunctioned. And Facebook, Google, I mean, they have not proved that ever. You know,
Actually, the opposite.
Yeah, I was gonna say cybersecurity. That's the world I work in, and a high percentage of vulnerabilities of unpatched machines and things that happen are because of the root code that Microsoft writes.
Right.
And so it's kind of like they get the best of both worlds. They get to get you in all the software agreements, but then on the flip side, they're like, oh yeah, let's put $20 billion towards cybersecurity so we can just include it in our E5 agreement, and it just comes with the package, even though it's really not that secure.
Right. Arnie, go ahead. You were gonna say something?
No, I was thinking about what you just said. Ethics seemed the weak point of Palantir, and actually something on which it wasn't really credible, like the Vince article said. Palantir with ethics? Are you joking? Well, actually, it turns out that by working in the military field, having to deal with the most complicated regulating environment is actually, again, the proof that Palantir can have an edge over the other software companies, because companies that have never worked in such a complicated environment now will have to face, hey, how do we actually manage all this complexity in terms of compliance? And then Palantir is so ahead that now it already released a product that makes compliance as a service. So we can see again that what Palantir shares as a product is already what solves a problem that is emerging. We saw that with generative AI, you build the platform to actually run the models, but in terms of regulation, for instance, we know that the US will inevitably start building regulation around it, Europe as well. And they are already thinking of, okay, how can we actually help companies operate in compliance, again, with all the requirements? Boom, FedRAMP, compliance as a service. Now, slightly different topic, but that's the underlying structure. On top of this, I would add one question. How it is that actually Palantir can be ahead of the game? What's the key dynamic that actually helps Palantir be ahead?
They already have the proven value realized in the most difficult circumstances and fields, such as battlefields on the war grounds, fraud in the commercial and organization. They already have proven in the most toughest, difficult segments to win business and contracts. They've earned that. They've gotten those renewals, and they've been able to quantify those actual results. So you're not seeing that from many companies being able to prove that and actually quantify the value they're delivering, in my opinion.
And what's the business structure component that actually allows to do that? How can you develop R&D needed to actually be ahead?
It has to be tested. You have to have the experience. They have 20 years of proven
the government side.
It's not only the government side. I would say the fact that Palantir is often criticized for being a consultancy company is actually its core strength. Because what I realized is you have these guys, FDs, that are basically a weird mix between a top McKinsey consultant in terms of business strategy and actually a top software engineer. Basically, is a superhuman empowered by Palantir Foundry to actually solve this problem. But the simple reasoning is if clients have these huge problems that they have not been able to solve them with the traditional companies, with the traditional software, if Palantir actually goes there with it's superhumans, FDs empowered by Foundry. If they solve those problems actually become product. This way, naturally, Palantir is developing products that solve the biggest problems, which means they are naturally ahead of the competition.
Yep.
Right.
Yep. Yeah, just like a Mitz video when he said the guy goes from Tampa General Hospital. There was no other solution that could do this, so it was a no-brainer to pay the money, you know?
That was a real thing. Like, I met with a fund in New Jersey. They manage a decent amount of money, and they got invited to FounderCon. And he goes up to the General Hospital guy, the Tampa Bay General Hospital, and he asks him, like, he's trying to, you know, figure out why Palantir. And the guy's like, what they did for us, no company on the planet could have done. And it's like, if we know that's the case, this is a multi-bagger, but it comes down to the execution of sales and like getting the whole world to see that, right? Which is the hardest issue. Let's transition to, so we talked about AIP, we talked about GAAP profitability. I guess we can talk a little bit about client growth. We had 55 deals last quarter, 30 net new customers, 55 deals spread across the $1 million to $5 million range. Obviously, them getting into more smaller mid-sized businesses is going to help them a lot. Any specifics you want to see? You know, the biggest argument around Snowflake is they have 8,000 customers, Palantir is 360. Do we really want a lot more customers this quarter? Kind of how do you think about clientele growth going into this one? Matt, you can go with you.
I'll start. Yeah. I think one of the best things that they can do, and I really hope that they listen to this. In fact, I might clip it and send it to them if I could find a good email address, is I think one of the best things that they could do, they do a really good job about showing client growth and how many clients are there. I think one of the best things that they could do is separate one slide into 3 separate areas to show what client base is within, maybe like over the past few quarters, what client base is in the acquire phase, what client base is in the scale phase, and what client base is in the expand phase. And the hope is that, you know, you have a consistent pipeline of people going from acquire to expand and then to scale, right? Or scale and then expand, sorry. So that way you can kind of see, and hopefully everyone kind of gets to the place where they're kind of in the expand phase over time. But that would help people kind of understand how much revenue growth might actually be coming. And the hard part is like we just expect, and it's very hard to kind of quantify mentally to say, okay, we've acquired this client, we think it's going to be X amount of millions of dollars, but it's like we don't really know, you know, if that's a trial phase or if that's like, you know, where they're at with Hyundai, where it's obviously like they're continuing a continued partnership and they're kind of billing their $50 million a year or what have you. And that would really help me to kind of understand from a pipeline perspective. It's like, oh, wow, they have 300 clients that are currently in the acquire phase that might eventually start creating a lot of revenue once they get to the scaling phase. And that would kind of help, and you know how quickly they're kind of backfilling, say their expand phase, how busy their forward development engineers are, and because really when it gets to it is when you think about it, the most intensive part of it is truly that very beginning acquire stage where you're kind of in-house for several months to try to get everyone's basically way of working from however they've done it in the past to this new digitally transformed way of working on the Palantir operating system, whether it's Foundry, Gotham, or what have you. And then it's really once you get to the scaling phase where they kind of hands off a little bit, but they also kind of set up within your organization a team that is capable of kind of creating applications or working with Palantir to kind of continuously gather. And it really, once you get to the scale phase, is when it really starts to truly penetrate and feed in. And so I'm like, really just, that's the piece about customer growth where I'm kind of like, okay, cool. Like you got 50 new clients, but to me, it's hard to really quantify. And the way that I kind of envision the slide, and then I'll hand it back to you guys, because I know I've had kind of the pedestal for a second, or soapbox is maybe a better term, is I envision like one slide where you kind of have a top bar for the acquire, a middle bar for the scale, on a bottom bar for the expand, and almost like a client bar, just like how they normally have, where they have like a Q1, a Q2, Q3. And that way you can kind of see, you know, year over year, how is it growing within that individual sort of sector or that particular phase of growth? And you have it for each of the three. So it's like you can see that, how many people have gone up in terms of how many additional clients have gotten, how many they've gone down.
I understand what you're saying, and I feel the same way. 2 points on it. One, I think maybe they're not doing that because of the different billing models they have now, because they do have a consumption model. So because they pay as you go is an option, it really may be hard to predict when people are contracting and expanding, especially during economic tougher times. Trust me, I want to see exactly what you're explaining, because then it allows you to build models out. My guess is the reason they're not doing it is because they don't want to invite this scrutiny that they already have already about like just one quarter, everyone flipping out because all of a sudden maybe the expand phase doesn't look as big as what it was last quarter or something like that. That would be my guess, but I totally agree with you. When they become more mature, that has to come. I'm guessing they're not doing that because they don't want to invite the scrutiny just yet. Just my take, but I would love to see it. I would love to see that. I'm thinking the pay-as-you-go model is one thing that kind of holds that back, and then also, some customers aren't a good fit after acquire, right? Like there is the chance that they could be doing a lot of those. They had those SPACs and they had some others. They're not afraid to fire a customer if they're not willing to put in the work. I was watching a video earlier today, and the guy talks about, hey, the customer has to admit, what are your problems? Like, and I've heard you, Matt, talk about this as well when you worked with them. Like, you have to say you have problems, or else it's like, you're not going to get. They want to be able to prove out, okay, give me a problem, a significant problem in your business, and we'll solve it. But you got to be, willing to share what's going on.
Yeah, sorry, Arnie, I don't mean to cut and keep you out of the conversation. That's the hardest part that I saw, is like trying to have people admit that the way that we've been doing things isn't right. And the reason why we're bringing Palantir in the first place is because we admit we have a problem, and we're trying to create this digital transformation or this digital organization. We don't know how to do it. And so it's admitting and saying, look, like, we're here and we want to work together.
What we've tried to create, it's not working.
Exactly. A lot of people don't want to have that culture shift within their organization. They don't want to give up the reins, right? Everyone is working people that are higher up in management are there because not a lot of times they're great at what they do, but more because they're power hungry. And unfortunately, they've just gotten lucky because we're all just trying to do our best, right? I don't think they do it maliciously, but I think sometimes people are just really good con men at the end of the day. And I'm not saying this is everybody, but I'm saying this is some people in some organizations. And a lot of times they can't see other people's perspectives. They don't know where to give credit where credit is due. They might be a great engineer. They might be a great geologist, or they might be a great, mechanic or something of the like. They might be a good field operator. But the beauty about this world we have these days, the Internet of Things and all these sensors and everything that we have, is the beauty of the data that we can gather and truly shape, how we have previously done things and transform into how the future of things are going to be done. And that's the beauty of Palantir. And it's very difficult. And I saw a lot of internal struggle with that. A lot of people shifting within our digital organization to align with, hey, like, it's a different world, very different.
90% of companies' digital transformation projects fail.
Yep. Arnie, go ahead.
One thing that popped to my mind when you were talking about the fact that you previously we had the acquire phase, expand, scale disclosed, is the partnership with Exxon. What stuck to my mind there was them saying Exxon became straight an expand or scale customer without passing from the acquire phase. I wonder why that was the case, and if that is replicable. I would say the faster Palantir becomes, the more empowered these FDs are, especially now with also LLM models. we don't have to think only from the client perspective, but also we have to think from the foundry perspective. That means developing new products becomes faster. Entering the client to actually solve problem becomes actually faster. Imagine you have the toolkit of the FTEs becoming better and better, and that inevitably reduce the time the FDEs needs to stay in the client home, which in turn reduce the cost for Palantir related to the client. So I think here they want to hide something, but we don't truly know. And still connected to this, I would like to know your opinion about the fact that we know Palantir is heavily involved in Ukraine by providing software for free. And it is also very involved with the NHS, which theoretically Palantir should have won the contract 1 year ago. In this year, Palantir is not covered, is not paid for actually all the job they are doing. From what I see, is Palantir is expanding much more than it is paid for. In other words, they're still again working for free. So basically, Palantir has 4,000 employees, most of which are forward deployment engineers. And there are these two big problems, Ukraine and NHS, that require a lot of people to work on. Meanwhile, they're not receiving revenues. So my observation here is, hey, we're talking about a growth that has not been excellent, while also having margins. But the reality is that we have the cost of the FDEs, and actually FDEs cost a lot, without actually getting these big revenues. So my question for you is, how much involvement do you think there is in terms of FDEs for Ukraine and NHS, in terms of how many people are actually targeted to that? Shyam, in an interview, said we mobilized the entire company for Ukraine.
I think it's a lot because think about it. It's the best proof of concept to go and show that you are battle tested, your product works in extreme circumstances, in a situation that the country should not win from a people and size mattered. Everyone thought Russia was going to come in 14 days and be done with it, and they've now proven it, gotten the West to really wake up. I don't know if our military budget has even been signed off yet. I know that we got the $850 billion, but we still have to get the debt ceiling fixed and all that before the government starts spending that money. But I think the West is definitely woken up on what they truly can do. And then you see what they got Lithuania. I saw someone in the comments there. They had a great interview from CARP in the Baltics at a conference, and the Lithuanian Defense Ministry hired them. So we don't know what contract that's going to result in. And then I would have to think NATO is just paying attention very closely. And the big takeaway from all Ahmed's videos, they were just so awesome. And I just wrote down, if we really want to make things really easy on ourselves as Palantir investors, all we have to do is ask ourselves these 3 questions. Do you believe there will be more or less conflict in the world next 5-10 years?
60 Minutes interviewed Taiwan's president, and he said it's not a question of if, it's a question of when. China.
Next question is, do you believe there will be less or more data generated by organizations and individuals? And the third question, will there be more or less complexity in making data usable, and who can regulate who has access to the data? Those 3 questions, I think, are going to play a very big role in foreign affairs and honestly, even our own Western democracy.
And let me add one final question to that regroups all of them. In other words, in 3-5 years, do you think Palantir influence on the geopolitics, on the company decision-making skills will actually increase or decrease?
I'd say it increases.
Because we see that Palantir is actually like it's very small, but the power game it is playing is actually very, very high. Like you don't have typically a 15-20 billion company hearing at the Congress and the Congress saying, "Oh yeah, your CEO, I know him well."
Well, this is the uniqueness about Palantir, and why I'm so interested in it. It's like on one hand, you are playing at the highest levels, as you're talking about, Arnie, in Ukraine, not to mention IL6 certification for a very $14 billion company. But then the NHS is contracting you to totally digitally transform a system that has 70 million people's health on the line. I mean, what company can do those two things outside of the big tech platforms in a way that is actually in line with the trends we're seeing with generative AI? And then, as you said, Dom, the protection of that data. If we believe that's where the future we're going to, then this is the bull thesis, and it's a really easy bull thesis to believe in.
Oh, and by the way, they don't believe in working against Western allies, and they don't want to do business with China and Russia. When everyone laughed at them about that, looks like they were pretty smart, and they saw,
Well, imagine how irritated it is Sequoia looking at this, because Sequoia didn't want to finance Palantir.
Wait, really? You read some history on that? I never knew they went to Sequoia.
I heard a mention related to that. Well, you can see that Sequoia didn't invest in Palantir. Of course, Palantir went to Sequoia to try Rise, and they were very, very frustrated because nobody wanted to invest in Palantir, and Sequoia is actually very pro-China. Like
they have a whole investment arm in China. Yeah,
and actually that was the branch that was going very, very well for them. So for them, from their perspective, even if they are top tier investors, not considering China was out of this world. And actually, Karp proved them wrong.
And one of the things is what I've heard on Twitter from the people talking about Sequoia, that's why I was interested in this, Arnie, is Sequoia China is investing in OpenAI competitors in China. Right. And so I think some people were just naturally having a discussion that we should not allow this. We should not allow American money or American institutions to fund adversaries that are building Chat GPT like technology, generative AI, which we know is going to be used against us. It's like, this doesn't make any sense. Coach Rep's comment here is great. Real quick, Matt, let me get to this comment and then I got you.
Yeah,
keep your eye on Congress, the X factor when it comes to generative AI. This is good for Palantir and bad for everyone else. If Congress gets their head out of their ass and says we need to regulate this, and that's not me saying it, that's Elon Musk saying we need to regulate this, who else is this good for other than Palantir?
Yeah, and that's the speaking like almost 180 degrees when you're talking about China's open AI competitors and things of the like. It's like, imagine how doctored those actual answers will be. Because, you honestly think they won't even allow Google and things like that within China? How realistic is an answer? And you could say to an extent, some of our media and some of our internet searches and stuff are doctored as well, right, with bias. But my thought process is I think this is one of the big values that I've seen in Palantir this whole time, and the whole reason why I think these NHS articles that come up about Palantir have always been garbage and kind of been very biased against, because they've always been like, oh, this company has our data. It's like, this company is the most focused about, making sure that data data privacy is the number one thing. And that was one of the big things that they, delivered to us. And I see it day to day about people being frustrated about not being able to access data and having to access this and that. It's like, well, let's just be frank. Like, you're a commercial analyst. You have access to commercial data that I don't have access to, and I have oil and gas data and the production data that, you don't have access to. Like, that is extremely beneficial and powerful.
It's a zero trust security model, which is actually the proven least privileged cybersecurity model. And no one likes even trying to go there, but that's how you keep things secure.
On that point, Brett had a great tweet today. Vice President Kamala Harris met with AI CEOs to discuss responsibilities around advancing AI. Palantir CEO was not invited, and neither was Tesla CEO Elon Musk. You would imagine Elon and Karp are two guys that need to be in this meeting when
Well,
we're
come
talking
on now, like we know like why. I mean,
why? Can you tell us why, Dom? Why?
I mean, you guys got political last week. I saw it and I was like, oh man, it's probably good I wasn't on that episode.
No, but this is true. I mean, this is obviously a very liberal bias for why they're not.
In my opinion, I mean, you see a lot of the controlling large tech firms that are on the left. Those are who they were meeting with. They were meeting with the people that already were censoring things long ago with Google, Meta, Microsoft, all those others. And, you know, they're not meeting with those that actually are not doing that. And I wouldn't bet against Karp and Elon. Those are two of the smartest minds when it comes to AI. So,
I mean, same thing happened from an EV summit a couple years ago, where you know Elon wasn't invited, and yet we see how well, as a car company, as much as I don't like to say how well Tesla is doing, because I think their market cap is a little bit out of hand personally, but from a car company, I think they've revolutionized the auto industry. Do you see similarities to what happened at that EV summit where Elon wasn't invited to this AI summit where Palantir wasn't invited?
Yeah. Oh yeah, for sure. I mean, you saw they had Google there, they had Microsoft. I mean, everybody who's a big player. You might as well call Microsoft the subprime of the federal government. At the end of the day, Microsoft's getting a piece of almost anything that's government related. So yeah, it's kind of a joke. And then I won't go on my personal tangent, but the fact that she was the one advising anything on AI is hilarious.
What does Kamala Harris know about artificial intelligence? Because honestly, I don't know what she knows about it all. Because I've never I don't think she does any.
She'll give you a good word salad about it.
I don't even mean that in an offensive way. Like, I genuinely, she's one of the most. She's one of those vice presidents that I've never seen. Like, at least Michelle Obama was trying to get people to stop being obese. Like, that was her whole thing for 8 years. Like, eating health. That was her campaign. I don't know what Kamala Harris's brand is. And so when
I don't even think they're taking it seriously. The president only stopped in on that meeting supposedly just to like see how it was going, and then stepped out, and something else was more important. Like, I don't think the federal government is going to be what fixes the AI piece. And that's why Karp in that interview was like, yeah, I would agree with Elon if China and Russia would play nice and actually follow the world's rules and everything else. But we obviously know that's not going to happen. So if it's going to be the West or it's going to be them, I would like to protect the West.
Yeah.
So one of the questions, sorry if you wanted to go to a different question or different route,
you're good. I'll be back in like 2 minutes. So go ahead. You got it.
Yeah, no worries. My question is like, we always talk about how Palantir is very Western focused, and that's obviously been apparent with everything that's going on in Ukraine and everything that's been kind of going on from a support of the United States perspective in terms of the DoD and things of the like. My question is there's still a lot of untapped market potential globally, but unfortunately not all of them are Western facing. Like, I believe there's a lot of ability to infiltrate India and the efficiencies that could be made with that, and potentially some of the South American countries as well. But it's like, are we just going to forego those opportunities because they're not necessarily Western
flip on a dime and they're not truly aligned to the West committed? I mean, India has supported numerous things from oil and everything else, and still doing business with Russia. I think that Karp is very serious when he says, and I'm sure Thiel and others in leadership, of support for the West, right? Like, literally committed support for the West. If you pertain to any risk at any point to our country, we're not going to give you access to this technology. How do I know you're not selling? I mean, zero-day exploits and cyber attacks are sold on the black market all the time, you know? So why would I give you access to one of the most powerful technologies to any country that I don't know if you're really fully devoted to US? Because if you were, you'd be doing some different actions.
Well, it's like Palantir is really focused on the quality of the growth rather than the growth per se. So short term, that could be annoying because meanwhile we saw other software companies growing much more. But if Palantir is actually making the right partnerships, that could bring them to more durability of the growth rather than pure growth, which from a long-term perspective, that is way more important. I have a crucial question for you, Dom, since you're here. that last week we discussed about the sales people having problems and disclosing their frustration on Glassdoor. I don't know if you saw something related to it.
I didn't catch that part, but I've spoken to three. Sorry, I'll let you finish your question first.
So I would be really curious about your perspective related to that. Meanwhile, this week we saw from Gartner that the reviews from clients are actually increasing and increasing very, very well. So far, Palantir has 4.7 stars, which is basically the top of the product rank there. And just last week, they were 32 reviews. Now they are 58. So the rate of reviews is increasing fast. And I would like your perspective from inside the industry. How much should we wait the Gartner client reviews? How much should be worried about salespeople on Glassdoor being worried and frustrated because they don't really fit with the Carter culture? They wrote something very, very aggressive, like "you're a psychopath" to the management.
I didn't see that one. So I've spoken to 3 different account executives there over the past of 18 months and looked at similar tools like Glassdoor. And I think, there's always going to be those naysayers and people that want to publicly bash a company they worked for that they maybe don't work for anymore. I will say, though, there's always a little bit of truth in anything like that, right? So, for instance, the consistent theme that I had learned from the 3 executives, account executives that I had spoken to was, this is a company that's new to sales. They don't know how to pay salespeople and really structure things in your traditional SaaS-based world. This is all new. I mean, people don't really have set account sets per se. And a lot of that's because customers still don't know what they don't know, and it's not a household name. That's why it's so important for them to be in front of Forrester and Gartner. That is a very impressive stat that they got Gartner Peer Insights to actually get that number up. That's tough to get customers to be willing to put that stuff out there. So that's encouraging.
To write the review, you mean?
Yeah. That's not easy. A lot of customers don't like to do that. And so what we will see is, I hopefully, to Amit's video earlier this week, I would like to see their presence at AWS Reinforce Conference or Azure's Conference or GCP. I would like to see them at a booth with Deloitte or Accenture, because those are the things that your Snowflakes, your Databricks, all of the traditional, your Microsoft, what you're used to seeing, Datadog, whoever you want to plug in there, your favorite SaaS-based company, that's the nature of commercial enterprise sales. And so right now, I think they're going through an identity of figuring out, how do we pay people? How do we structure this? They're investing a lot in the salespeople to make sure they know the product and can really sell it effectively, but that takes some time. But at the same time, you also have to think about, how do you scale that faster? How do you, getting CodeStrap at PwC, doing more stuff like that, like getting consultants that really know the product.
That's the thing. I want to see the Accenture, Microsoft, Google, ACP, AWS partnerships. Like, I know no analyst is going to ask this question, but if we could get a direct response somehow, to like, all right, you partner with Accenture, I think December.
They made big deals 1.5 years ago about Data Robot. We haven't heard anything since the press release.
Nothing. So well, obviously we know what happened. It didn't work, right? If we haven't heard anything,
I don't know. I think there's still some things that are held under the curtains. But to your point, Arnie, about the salespeople, I will say, the consistent feedback I've heard is that they're still finding themselves. And that's why another reason we have to be patient. This is not your,
what do you think about this? Do you think they should steal CodeStrap from PwC and hire him as head of GTM strategy at Palantir?
That's not a wrong idea.
That's not a bad idea.
He's the one with he initiated the developer evangelist community. He's been talking a lot about opening up the platform. That might be a great job for him.
Yeah, I mean, I hope Palantir's, I don't know if they watch these or some. I mean, there's a lot of people covering the stock.
Well, they watch.
I know
They watch.
I know they mention retail investors on their earnings calls, but there are someone commented earlier, they have an X factor. And that's why we have a podcast. You're exactly right. I would not be on a Friday night when my wife is home after being out of town to be here with you guys if it wasn't that this is such a unique and special product that we all get so excited about because we've never seen anything like it before. Like that's the one thing that kind of makes me feel good. And Coach Strap would probably say this too, is that we don't have to question the technology. Like the technology is a great product. It's more of don't F it up. Like, okay, let's get some coaching. Let's get some good managers. Let's get some good executives. Let's get some people who've done marketing and SaaS and bring them over, right? I mean, I'll never forget when I was in the Nashville airport and I saw my first Palantir billboard and it had the Ferrari thing, and I took a picture and I sent it to everybody. I said, "Look at this! Finally,
It exists.
So, yeah, it does. Like, yeah. So I think they're still finding themselves. You got to be patient with that because they're not going to spend money there just yet. They're spending money where they believe the best return is, and you have to trust that they know where the best return is. Technology.
And I think that the problem is everyone's so used to, and you have to think, like, when people talk about this GDM strategy, and it's like, are they just looking for a quarterly beat so they can get the share price to go to $20 and sell? Or are they actually looking for being a part of something that's truly revolutionary, which is why I invested in the organization? I didn't just buy it because I thought it was going to be a quick turnaround. I bought it because the culture that I experienced working with them was unlike anything that I've ever experienced before. You have to think, I partner with other, I don't want to say, let me phrase this correctly. I partner with other oil companies and go to other oil companies and understand their culture and work with their cultures. And it's like, I've worked with Microsoft, I've worked with Amazon, and then they have this group of dudes come in that is just unlike anything I've ever experienced before, to make me be like, okay, day one that this is company I have the ability to invest in it, I'm doing it, and that's what I did. And I've only increased my position since. And I think it's that unconventionalness that makes it something that's truly extravagant, right? The things that made Costco extravagant back in the 80s and 90s, and the things that made Apple and Salesforce and all these other companies that people were like, this is unconventional. Why are they doing it this way? And they're confusing Wall Street. And same thing with Amazon to an extent, where everyone's like, they're not making any money. This company's going to go bankrupt. And, it's like, these are the sorts of companies that eventually over the course of time stand out, because it's not to them about a quarter to quarter number. To them, it's about a culture. It's about a product. It's about a purpose to create and push something forward that truly makes them who they are. And to me, that's not something that you can just like sell overnight. It's something that over time is built and is over time molded. And eventually you're going to get the people like myself, or like CodeStrap, or like people that work at other oil and gas companies, or that work at Accenture, or some of these other accounting firms that have used the product, and the FoundryCon folks that are creating this culture. And it'll be slow and it won't be as quick as a Snowflake, but eventually people that use Snowflake or people that use other products are like, oh, it's not really an operating system. It's just an application to help kind of visualize data. And that eventually people are going to realize it's an inferior product, and then try Palantir and it'll work for them, and admit finally that, hey, we couldn't do it on our own. We needed to bring somebody in for 6 to 12 months to truly shape how our operating system around data works, and recognize that they needed help to push their enterprise forward. And eventually, like Chris has kind of said, over time, it's going to be like a Salesforce, where it's not going to be this big S curve where you're going to spend $2 billion to get a big sales team that eventually is going to crack the nut. It's going to be something like, you're going to give away the product for free, and you're going to establish an aerial dominance across a multitude of industries. And eventually, over time, people are just going to realize that it's the Microsoft of the 2020s and the 2030s. It's going to be this big behemoth that, is truly going to shape how the modern enterprise works. And I don't think that people understand that yet, but they will.
for those of you who like the whole $1 trillion market cap and 10x baggers and all that wonderful stuff, which is great, I would love to have that. In order to get something, in order to do something like that, you have to have a contrarian company. It has to be contrarian to what is out there today to have exponential growth. So you have to invest contrarian, because if you invest like everybody else and everyone's buying Apple today and whatever, maybe good company, but it's not going to give you a 10 bagger from here. And so you have to be willing to accept risk and also have patience with that, but also find the X factors or the differentiators like, oh, I haven't seen that before. That's worth me sticking it out. And if I lose my money, I lose my money. But that's how I feel about it.
Well, that's why it is so difficult, because in order to stick against the tide when it is against you, and we have multiple of proof, like also Palantir not invited in the AI things, Palantir not considered an AI company, still not being appreciated as a defense contractor, hated even if as a SaaS company, consultancy, they say, knowing that that is false, but having the stomach, the patience to actually keep your investment, despite people say, hey, you're wrong. That's the most difficult part of investing. But if we are actually right, that will be also very rewarding. Ray Dalio says, in order to be a successful investor, you need to be contrarian and be right. We know we are contrarian, and we are seeing the story unfolding. That, to my viewpoint from the development we are seeing, I'm seeing in 3 years now. Every time we check the story, despite there are some negative data points like the sales people not really fitting in, we have a company that has a story that is evolving, and I would say it is evolving in the right direction. So let me ask you the question. The stock price is already quite similar to the price we had last year in the summer. How much the company has changed meanwhile? Not only from the business perspective in terms of numbers, revenues, clients, but also in terms of awareness of the key people of Palantir. When we heard Carpetto talking last summer, we were scared of him banging on the table. Right now, Carp is confidently speaking to any audience, being that analyst or whatever. So I would say the rate of change in the company outside the numbers is already very good. Shyam talking to the Senate that confident, that was amazing. So I would say things are unfolding. Right now, we are seeing the numbers in the worst possible moment. And it is in this time, if you are right, that you can make a bargain. Not when everyone is happy, is euphoric, you see the revenue growth already skyrocketing, because that gives us false sense of security. It's no different from Tesla last year before the crash. I saw people so confident because Tesla was, oh yes, but they will keep growing 50%. Why? Because the recent past was 50% growth. The moment you start projecting that high growth, that was a peak growth in the future, and the price already reflects that, that's a big risk. On the other side, it is when the growth has slowed down to a point there where analysts start thinking, okay, the slowdown will be perpetual, and the market sees that, price the companies according to that, while by knowing the company from studying it very closely, you see, hey, this is actually wrong. That is where you have what value investors like to say, margin of safety.
Yeah, I want to speak to this point about being contrarian, and this is like the biggest point, right? I think this is something we don't spend enough time on. So I'm so happy, Dom, you brought it up, and Arnie, you followed on this, because if you want a company to have some massive return, right, 5, 10, 8x, I know all of us would be really happy with like a 5, 6x, but if we get 10, 12, whatever it is, if we're lucky enough to get that, it's only because it's contrarian and right. It's not in the snowflake that's trading 3 times their trailing 12. Like it's not in these oversized valuations where Warren Buffett invested in it because Warren Buffett's not the contrarian guy. He wants his dividend. He wants things to. If you want these crazy, like you were crazy in 2013 investing in Tesla, absolutely crazy. But if you did it, you did it. And so I think the beauty of, as we were talking about social media coverage, Arnie's point about awareness growing. Why are there these Palantir channels on YouTube? Why are they on Twitter? Why are so many people talking about it? Because it's interesting. It's an interesting company, right? And when you've got all this media, earned media coming for free for the company, it's because people are starting to recognize there is something unique about this that is so different. And it's like, it's a journey trying to analyze it. It's like we're these kids where we got this puzzle.
There's a word, a story. I think Palantir is successful and is going to be successful because it's not just another one. It is a story. C3 AI is just another one. Snowflake has a great execution, but I would say it's not such a unique company.
Yeah.
So you need a story. You have an hero, our Palantirians. We have the enemy. The enemy could be like the Eastern world, but also the frictions that we are facing. And we know that the potential reward, if our heroes successfully get there, is huge. So I think the story component
I'll
is
just
what
leave with. I know we're over time, but I want to say this one thing to Contrarian. To Amit's point, in 2013, no one was investing in Tesla. Tesla was about to go bankrupt in 2018. They thought he was a nut for trying to create electric cars, and now look at it, and everyone's trying to standardize on this, right? You look at Google when Google acquired. Well, first, when it even came on the map for search, everyone was using Ask Jeeves, Yahoo, AOL, everything. Google, who cares? It's just another search. How are you going to make money with a search engine, right? And then they go buy YouTube, and I'm like, that's a stupid acquisition for $1 billion. It's actually one of the best acquisitions of all time. You look at looking at Microsoft when they went and turned. We're going to take away perpetual licensing. Adobe and Microsoft said, we're not going to do perpetual license. We're going to do subscription. We're going to make people pay us monthly for the same product they used to get for like a 3-year contract. Crazy, right? Everyone thought people were just Amazon, we're going to sell books and CDs. Well, why would I invest in that, right? So you look at these times and things, and it's so easy to go 2020 in hindsight, 20 years later, or 15 or even 10 years later. But it's those moments when you got that gut feeling like, should I be in this? Like, and if you've done your homework and you've diversified, you can afford to be in Palantir and others. Like Arnie's in AMD. That's a solid company that's not going anywhere, very undervalued. Like if you do your diligence, you can take on a lot of risk.
No, I agree with that 100%. And again, speaking to this point about believing when no one else believes, I mean, look, this is what I relate to personally with my startup, right? I have a very specific, nuanced thesis about how I think about audio content distribution and discovery of content in general. And it is uniquely contrarian to a lot of how other audio companies have positioned themselves. In fact, I was talking to a guy who runs an investment fund in North Carolina, and he studied Spotify's business for like 3 years because he was trying to figure out the investment thesis for them. And he came to the conclusion that he can't do it. And I saw him tweet randomly one day, and I emailed him immediately. I was like, yo, can we talk? And for 40 minutes, we're talking. I've never had a conversation with someone outside of this guy, this random dude in North Carolina that I somehow found on Twitter. And we are both on the same page of having a contrarian view on a company that has tripled their user base, tripled to over 500 million people in the past 3 years. And me and him are like, this is not the right stock or the right company, right? And that's very contrarian. Will we be right or will we be wrong? I have no clue. But there's no way I'm going to build my startup unless I don't believe in that contrarian thesis and then I execute against it. And it's the same thing as being an investor in Palantir. Maybe you have a couple quarters that are bad, but do you believe in Dom's questions? Is data going to be more applicable in the world? Is the world going to get more deglobalized? Are things going to get a little bit more scary where we need this software? Is the government going to need more companies that can do IL6 and only have 3 of them to choose from? If you believe in these things, then the thesis is intact. As Arnie has said, even if the numbers don't look fine, the thesis is intact. The numbers just have to reflect it over time.
I mean, if the key questions are right, it means that despite some slowdowns, some accelerations, the company will keep growing. If the company keeps growing, it is only a matter of time. It's not a matter of if the value the price will converge to that value.
I would rather have steady growth than super high growth that falls through and then you plateau.
Yeah, I mean, the real risk is having companies that everyone else already appreciates, because all those expectations start getting incorporated into the pricing. For instance, now maybe I say something absolutely wrong, but I see that every time Apple becomes considered safe haven, oh, Apple is safe, Apple is considered like cash, there is where Apple is actually starting to get risky. While when nobody wants to touch Apple, that is the moment to actually get into it. For instance, during the pandemic, I entered aggressively on Apple because the market perspective was, oh, when inflation rises, you don't have to have tech. And it was, are you joking? Like, if there is one company that actually has pricing power, both on the customer side and on the supplier side, if there is one company, that is Apple. And at that moment, people didn't really want to have Apple because the narrative say inflation goes up, you sell tech. And so you need to be very, very careful of understanding what's the narrative, what's the reality. And when you see a mismatch, by studying things very closely, that is where you need to get excited. You don't want to get excited when everyone else is excited, because that inevitably is already reflected into the prices, which means low margin of safety, which means you have what's literally high risk, not the stock moving a lot like a CFA would say.
I don't get it always right at all, but I'll tell you a real world example. Last September, NVIDIA was down to 113 a share, and everyone was freaking out about the gaming graphics cards. Oh, the gaming people aren't going to game anymore. They don't have crypto. Oh, it's a broken company. It's not going to, that's where the growth was. And I fully believe it's a compute as a service platform with AI and everything else. And I sold all my trade desk, doubled, tripled my position because it didn't make sense. Like, one bad quarter doesn't change a company's thesis.
But you believed in an overarching narrative.
Oh,
right?
yeah, since 2019.
That's the other thing.
You can do that only if you truly understand the business. So you don't only look at the stock, but you look at the fundamentals, you know how the business model works. And that's why with Palantir, that is heavily complex, you need to take time to actually study it. I think I started having a sense, okay, I understand this company after more than a year studying very closely for so long. So I think what we are doing here is already unique, trying to unfold this weird, complex beast.
Even Apollo, if we had to answer some questions on Apollo right now, I don't think all of us could really intelligently answer it. We still don't know.
There's some questions I still have for Code Strap on Apollo, some hows on how they're doing it.
Look, from what I read on Twitter, basically Apollo is the holy grail, the product that every developer wish to exist, but the reality is it exists and they are not aware of. Yeah. Imagine, and it is hard probably even for them to actually conceptualize it.
It's big, man. You got to believe in a story. I mean, the other final thing I'll say on this contrarian thing is, if you're contrarian, you also believe there's a narrative that guides your contrarianness. So with Palantir, we're contrarian on terms of how they interact with the rest of the AI market, but we believe that the AI market is going to grow. With me and my startup, I'm contrarian in terms of how I think of audio distribution, but I believe that content and the amount of content being created is only going to increase over and over and over, which means people are going to create different forms of content. That's going to need discovery. And so there has to be an overarching thesis that then aligns with you being contrarian, right? It's 0 to 1 at its most foundational core.
And you can't ignore the finances though, too, right? We're also not stupid. We look at the balance sheets and they have no
debt. One of the most perfect ones.
Yeah, like $3 billion, 4x assets versus liability. Like they have runway to play it slow play it.
Right.
So this has been a pleasure, guys. Thank you for.
This is great, guys. This is awesome. Thank you, 280 people for joining us. Everyone's comments are in the description.
I saw there was an undiscussed super chat from Ricky Mello before that asked me something very difficult to do.
Let me pull it up. Oh my god, I must have missed this one. Hold on, where is this one?
Hopefully, still in the chat.
It's still no, it has to be. It's just all the way up top, I'd imagine.
Yes, Ryan, I am in NVIDIA. It is 35% of my overall retirement portfolio.
There you
go.
So while Amit looks for that, I guess my big questions that are still outstanding for me is like, at what point do we deploy this capital? And I think another thing is, and I think I want to relate. Okay, I'll pause for a second.
So he wants you to say it's a me, Mario.
It's me, Mario.
I didn't think I thought you were gonna not do that. That's
wow. Well, there we go.
That was good, Richie. That was good.
Great. Arnie, I gotta send you the $5, bro. Tell me, do you take Bitcoin? What do you? I gotta give that to you. That's you.
No worry.
All right. Are we good, or Matt? You wanna?
No, I mean we don't. Yeah, I think
we'll save it for after earnings.
Yeah, we'll save it.
All right. Thank you everybody for being here. Everyone, links in the description. Arnie, Substack, PalantirBullets.com. Make sure you subscribe. We will see you guys.
Thank you and
later.
Good night.